one thing that you can be assured about while running a startup is that it's an emotional roller coaster. There will be more lows than there will be highs. You will always be working with a lot of uncertainties. You'll always be looking forward and thinking, why did I do this startup? And I have seen this over many, many times with working with smaller companies and bigger companies. Although they were always looking forward and looking positive about startup journey, but there's always some kind of a emotional roller coaster that they were going through. Every day when you talk to a VC and you face a rejection, and you will face more rejections than you will actually face acceptance, right? Whether you talk to customers and out of 10 customers that you speak to, you just have one customer that will basically give you a yes or his money and open his wallet. You would have faced 9 rejections. So as a startup founder, one thing that I always tell people, that never ever think that you will be accepted upfront. You will face many rejections, and you have to manage your anxiety if you have to face so many rejections. In fact, I'll tell you a very simple story. When I started up, and since I was a VC myself, unfortunately, we started up in a very, very bad time where the market was going down. I thought that raising money would be very easy for me because most of the VCs have been my friends. But we faced somewhere around 40 rejections, even after coming from a VC world. So if you're not even coming from a VC world and you have not been an entrepreneur upfront, you will face many, many rejections. So be prepared for that if you're thinking of starting up. So you have to find ways to manage stress. The best way to manage stress is take off time for yourself. At least don't get overworked, right? So don't work for 7 days a week. Just take 1 day off. Definitely. Meet your friends. Try to hang out with them. I think friends are the antidote of anxiety. And have your family and friends around you. I mean, it might look like a very cliche, but that's the only thing that will keep you going forward, is the support system that you build around yourself. And that support system doesn't necessarily come from only friends and family. It can come from your co-founders and co-workers. Another thing that I tell people, and I have been following this myself from the day I knew that I was supposed to start up, and the day I started up, I started going to the gym. I started playing. I take at least an hour of my day maintaining a very, very healthy lifestyle. Physical lifestyle, physical health will improve your mental health. There are many articles, so I'll not, talk more about it. But if you are not healthy physically, you'll not also be healthy mentally. And the fourth important part of it, you as a founder, there is generally a sense of liability in everyone, that you have to say almost yes to everything. That's not the truth. And as Indians, this is what I've seen, and I learned that as well, right? That I never said no. It was very hard for me to just say, no, I will not do that. And a friend that I worked with long back in T Labs, he's also an investor now. He runs a VC fund. He taught me how to say no. He said, saying no is acceptable. The other person might feel awkward because, where there are very few people who can accept a no, and especially in our country. But it's just not, that does not have to be your obligation to say yes all the time. Learn to say no. This will help you in a long, way everywhere. Even in your personal life, this is going to help you if you say no to a few things that you feel are distractions. I understand that saying no to a customer also is part of it, because you'll face a lot of time when you're building a product and a customer will say, hey, build this out for me. And early on, this is a very interesting trap. I have fallen into this trap many a times. I still tend to think about it. But once you start accepting that you're on a path, on a journey, and this is a distraction, first of all, you have to figure out that this will be a distraction for your team, then say, no. If you figure out that this is going to be a learning for your team and there are no low-hanging fruit, I would say always accept that kind of a project. But that project doesn't have to be a very long project. It has to be a short project. Definitely don't do anything that doesn't align to your vision, right? So, for example, a lot of customers back then, when we were running startups in 2005, 6, would come and, I started a product company and would come and say, hey, look, why don't you do this project for us, which was not related to the product at all. We said no, right? For example, this is how very interestingly I met my ex-CEO, in Times Internet. We wanted to run a product company. We were running a cloud hosting platform and we were talking about acquiring Times Internet domain and hosting platform, right? That didn't go through because of some reasons. But, Gautam, who became my CEO later on, said, why don't you do this project for us? It will keep you running. And, I'm looking for good candidates who can run this on the side. We debated it and we said no. And actually Gautam liked it to the extent that both founders and co-founders, when we exited Lime Labs, we actually he called us and he gave us a job. So, no can be powerful, right? And there are people who accept no. Another thing I would talk about is the decision fatigue. You will always be taking a lot of decisions while you are a co-founder or a founder. I have in a mental model of how I want to take decisions and how I take decisions, and I will share this mental model with you. The first and foremost thing is I never take any decision from a point of fear. And that's what I tell every startup founder or everyone to do. Don't take a decision because you feel something will happen, and you take a decision based on that. For example, if I take this decision, what will investors think about it? Will the VCs fund it? That's a very bad way of thinking about it. You have to take decisions based on what is right for the current set of problems, not what people will think, or not what VCs will think, or not what investors will think, right? And I'm talking about right decision. I'm not talking about that, you have to calm the investors. There have been cases where people justify their decision of conning investors, thinking that this was the right decision at that point in time, right? And this you will face many, many a times, right? For example, and especially related to funding, there's a lot of time you will change your course just because you feel that it's not going to be funded. And especially when there is a lot of hype over a certain technology, right? In current world, if you're doing a non-AI startup, for example, you will realize that it's easy for you to raise money if you're doing an AI startup. And you can't apply fundamentally AI to your own product. And it will, a lot of times in your mind, feel like, why don't I do an AI startup? This is emanating from the simple fear that I will not be able to raise money if I don't do an AI startup. Again, in my opinion, unless your startup is absolutely not working and at your time and decision point of pivot, don't do that. Otherwise, your decisions and even smaller decisions will be wrong when you take a decision from a point of fear. Again, the same thing is, do not decide basis what your competitor is doing. You're learning about your own company, your competition's learning about their own audience will be very, very different. Sometimes it will be similar. You have to keep them in the back view mirror, but don't decide on the basis of if they launched a feature, you have to launch the feature. Understand that they are experimenting. Understand that you are experimenting at point. And I'm talking about early stage. I'm not talking about later growth stage company. And if you are talking about, and if you start copying their feature or they copy your feature, you're all essentially giving to customers what they don't want, right? So a better way of it is, we'll talk about this in the further slides, is actually talking to customers and how to talk to customers, right? Again, another thing that I've learned and seen with founders is that they don't prioritize and they don't delegate. And this is a problem personally I have. I try to do everything myself, even if it's just writing a blog, because inherently I'm a person who thinks that I can do better than the person that I've hired. But I've learned over the course of the last 20 years that I have to prioritize and delegate. If you have a team member who is understand how, whether they are better at something, and then trust them to do their stuff. Although put, gates of figuring out whether they are doing or not doing, right? So have weekly meetings, for example, and talk about what they achieved and what they did not achieve. What we do currently is we set weekly goals for all the management that we have. Every person has 2 to 3 achievable goals, what we call SMART goals, which is measurable, simple, and achievable. And these goals are always made every week on the learning of the week. And this is aligned to our quarterly goals of what we want to do. And this is just simple 2 to 3 goals, right? For example, a goal for my sales head is that I will talk to at least 5 customers this week and figure out the insights and share the insights with all the sales reps. The goal for the sales rep is I will talk to 10 customers this week, and based on qualification criteria, we'll try to close 1 customer or 2 customers, based on the percentage. So always have these tracking goals for you and your team based on a very, very simple set of measurable acts. But delegate and don't get too much into, unless people ask for help, and create a culture where people ask for help. But if you start doing something yourself, one, it will be a bigger emotional roller coaster for you. You'll not be able to do everything yourself. But don't also leave everything on people saying, I give you and you do whatever you want to do, right? You have to, every week or every 15 days, you have to put on gates to figure out where people are, whether they did it or whether they did not do it. So there's always a dichotomy whenever you are a founder, or even if you are, running, for example, sales or marketing or anything, right? There will be, everyone will tell you that decide basis the data, but data will be impossible to come, right? There will be very little data that you can use to decide, right? You will always be in doubt what to do and what to decide. That's what decision fatigue is all about. It's not necessarily just the number of decisions that you have to take on a daily basis, but there will be 1 or 2 decisions on every day or every week where there is a lack of data that will not allow you to take that decision. Or, if you have created a culture like we have created where everybody can question decisions, it will be hard to explain to your team why you took that decision. I would say trust your instincts. It's a lot about the gut feeling, and gut feeling is not about anything but just experience of you doing that thing multiple times, right? We do this a lot of time in marketing when we are running an ad or posting in groups or creating our Instagram stories or creating our Facebook stories. A lot of time the question is asked about the ROI of that campaign, about how much money we should spend, right? It's mostly our gut feeling and our experience that this messaging will work with our customers, and let's try it out. But that said, do your A/B testing with that messaging and have a couple of set of messaging, as be very open with your team so that they can suggest messaging as well right now. And be prepared for failure, right? This is something that I have not written in my slides, but what happens is people do not accept failure very, very easily. And I'm not talking about the big failures. I'm talking about small failures of your experiments, right? Be open about saying, look, this is an experiment that I ran. I failed at it. I accept it, and I move forward to another experiment. That way, your iteration will never stop, right? I've seen a lot of people, especially founders, they get so disheartened after a failure that they seldom want to do anything, right? I'll share an example with you. Grade Up founders have invested very early on a very small check, and we basically wrote another check in them. There was a point when Grade Up would have shut down because the founders just felt like this is a failure. They just don't want to run the company. The founder was all of like 26 years old. His co-founder had left. He didn't want to run it. So we sat down one day for an hour and discussed about, what is he going to do after shutting down Grade Up? And he said, hey, he will go back to a job. And I asked him, you're 26 years of age, right? If you go back to a job 3 to 4 years, you'll be married, you will have responsibility. Will you ever be able to do a startup again? He said, no. And I said, is there a 2 to 3 years that you can spend more to your life, or even less than that, and another year that you can spend of your life running this and trying to change this? He said, yes, he could do that, right? Another founder joined within a month because he went looking for it. They got an 100 million exit very recently, a couple of years ago. I'm talking about this about 7-8 years ago. So the point is that if you give up too early and you consider something as failure, you will try to give up. And I'm just saying, learn from your failures, be very persistent and consistent, unless at some point in time you feel absolutely. I'm not saying shutting down is not an option. I'm just saying, even before you decide to shut down, think whether you're shutting down because of the fatigue or it's because you are giving up, and then decide on that. Okay. Another thing that you have to consider, and this is very, very important thing, I've always believed in building teams top down, is assemble a team which has complementary skills, not a team that thinks like you. That, in my opinion, is a big no-no. You want teams that are very, that basically that can question and that can, force you to question, right? Don't discourage questions, right? At some point in time, you have to take a decision, but let the questions come through. In fact, do not create a culture of everyone saying yes or people coming up with answers, right? Even if somebody comes up with answers, we always ask that person to go back and figure out the right question. If you figure out the right questions, answers will come, right? Don't jump to answers. Think about questions, do analysis, and then come with answers that align to the analysis. What I've seen in teams is that people, rather than spending enough time on the questions, will simply jump to the answer and say, let's try this, right? And right now, because of the instant gratification and because we want to do things faster, we always jump to trying things without even thinking about that answer aligns to that question, or what is that question actually. Avoid this pitfall. Try to frame the right question. If you frame the right question, you will definitely go out and find the right answer. If you do not, you will always be trying different stuff. And most important, one of the biggest thing that I've seen, that investors will look for a balanced, experienced founding team, right? That's why the founding team becomes very, very important. So if you're raising, and if you're not a second-time entrepreneur, or somebody who has raised money in the past, if you're raising for the first time, everybody will ask, who is the team? How have you built it up? And that becomes very, very important. Another thing that I've seen people have a big gap with is not being able to tell a story very, very well. You have to do a multiple try of your story, right? Compelling narrative is the easiest win that you can get. If you do not have a story, if you have not gone through the story, you'll not be able to attract the first employees, and definitely not investors, right? A way to write these stories is that you have to try it with your friends, with your families, with your co-founders. give the pitch, a dry pitch. That's one thing that I used. I always used to give pitches to my friends and people who were backing me, right? They gave me important feedback about how the story should be, how the deck should look like, what the deck should contain and not, right? The first pitch that I had, even after being a VC, right? When you are into it, it's very hard to sometimes let go of things that you have done and presentations and slides that you have made. Even after being such a experienced VC, I made a pitch, first pitch, which was 45, because I wanted to put everything in the pitch that I had learned, right? I gave that pitch to a very good friend of mine who was also running a startup. And he said, this is too long. You have to cut down your story. It was actually a long pitch. It was a 1 hour pitch. So I cut it down. I put it into like a 20 minutes pitch in a very crisp manner. And that's a story that I still kind of carry on even for seed and series A. And another thing that I would tell you is, do not ignore building your personal brands. I think there's a lot of CEOs and startup founders I've seen do not build their personal profile, personal social profile. Your customers, when you approach them, they want to see who you are. They will search for you. Your investors will search for you if they don't know you already. So the social media profile is very important, whether it's LinkedIn, whether it's Twitter, whether it's, I think mostly for investors, Twitter and LinkedIn. It depends. We are in the fashion industry. For us, Instagram also becomes very, very important. I, for example, have no Facebook profile, but I had to make one just because most of my customers have Facebook profiles and they spend a lot of time on Facebook. So I had to create that Facebook profile and change it according to my customer persona. So this is one learning that, you will come back to, that do not ignore building your personal brand and around your company as well. Sometimes you are what your company is, right? So if your personal brand is exactly opposite of the company, you will have to align your personal brand with the company. Don't believe everything you read. I come from a media and I know this. Whatever is written, whether it's in Twitter, if it's half the truth, sometimes it's not even the truth. Whatever influencers or finfluencers you're following have hidden motives. They're doing it for money. They're doing it for certain things, right? So always question whatever you read, whether you read it in the mainstream media or whether you read it in the social media. You need to investigate before believing it. Obviously, you follow a certain group of friends, you can believe your friends, but WhatsApp forward, etc., are the most dangerous, right? Sometimes we get caught in that a very high return kind of a game. Do not play that game if you are a startup founder. There are no high returns. You have to have your bullshit antenna very, very high. Early on, this was again told to me by a very big VC that you have to tweak your bullshit antenna. What it means is you have to understand people. You have to understand who you are dealing with and what they are pitching to you. You will find a lot of people who will say, I will help you raise money, but we need a certain percentage of the company. At later stages is fine. At early stage, it is not. You should be raising the money at early stage. There are a lot of people who will come to you saying, hey, we will become your consultant. We will become your go-to-market strategist. We'll become your sales strategist. I think if you're encouraging, some of these people will be genuine, and that's where you have to figure out how genuine they are. But at an early stage, I'll tell you that it's a big no to get a marketing strategist or a sales strategist in your company. If you cannot do sales, and in very early stage, leave marketing at all. Everything that you do to get your first 10 customers has to be a hardcore sales strategy, not a marketing strategy at all, even when you are in B2C, right? So avoid these jokers and leeches. Always have your second level thinking on, right? Just don't believe without sending you to your second level brain, which basically does the number crunching. There is no instant gratification. Everything that you see has taken 10 years of painstaking persistence and resilience by founders. As you jokingly will hear that instant success is a 10-year grind, right? we get caught in this trap very often when we hear that some company in your competition has raised 4 million or 5 million. We got into this trap very early on, right? With 6 months down the line, we said, oh, let's go and raise money. Why are we not able to raise money? Why are we not able to do sales? Sales is a cycle. There will be a time you will have to build it out. You'll have to build out the processes. Success will rarely happen overnight. You'll have to show up every day. You have to work hard for your success. Another one thing that we have tried is whenever we get a customer, we always celebrate that win. It will, and we know that it will come in small packs. It will build up to be a larger success. Again, as I talked, you will get rejected more than accepted. So you have to continuously work on your startup. If I give you a timeline, I think an average timeline is that it will take you at least 18 months to 24 months to even understand where you are going and what your customers are. Very rarely you would see somebody hitting it out of the park within the 6 months to 8 to 9 months, as people would have you believe. Raising is not a yard of success. Let me tell you, sometimes you will just come up with a lot of people very late, or people who have had successes, they can raise a lot of money even without, and that's a different psychology, that they have created an exit for a VC. That's why a VC will bet on that again, right? And they have, if somebody has created 100 million, he can be funded for another 100 million very, very easily by the same set of VCs that he has created the money for, because they have demonstrated success. That's a completely different ballgame. Don't get too much attached to saying, hey, somebody has raised 4 to 5 million, then I should be able to raise 4 to 5 million as well, right? You have to work really hard and don't get frustrated by your competition raising, for example. This is just one slide that I will say that you have to kind of manage your own finances, and your company, you have to learn finances. That's the most important thing. You have to know what every line item in an MIS means, of whatever your accountant or your CFO or your finance person sends you. You have to devote at least 2 days a month looking at your finance. And this will help personally as well, not only financially. If you're seriously thinking about you running a startup, even after one startup and 10 years investing, and if you're thinking startup is going to bring you happiness, let me break that down for you. You are much happier not running a startup. If you do not start for whatever reason you start your company, right? If you have started your company for making money, only for the sole purpose of making money, you will get frustrated much faster. But if you are solving a problem, if you really feel about running a business, if you really feel about running a company, right? For me, personally, it's not about the industry that I am in. It's just solving a problem for the customer. It's just creating a business and running a business. It's not about money. Money is definitely a goal. Money is an outcome. That's how I think about it. My daily decisions are more guided by the fact that I have to create a business. I have to build a large business. It's as simple as that, right? It's not guided by that there is going to be 100 million exit for me. A lot of people are caught in that trap that money is the goal that they think about every day while building a business, while doing a startup. If you do that, you will feel frustrated more often and you will give up much more easily. But if you're running because you are solving a problem that you really deeply feel about, or you want to create some people want to create names, some people want to create legacy. If you are working about these things, these are long-term things. You'll stick on much longer. That's what will keep you carrying and going on. For everybody, it's different. So there are two ways investors invest in companies. One, if they have an existing thesis that they're working on, which is very hard to find, or if there is a buzzword that is going on, for example, AI or crypto. That's how most investors invest. Not all investors, though. If you are thinking about starting up something, there are two ways of doing it. It shouldn't be based on what investors are doing or what investors are not doing, right? A very simple way is, for example, the AI is the flavor of the day. If you are running an AI company and you're solving a problem, investors will be happy to look at it. But then they will look at the team and see if they can solve an AI problem rather than you just, creating an AI pitch and going to them. AI is not that easy. Your co-founder has to be a hardcore techie. You should know what you are building and what is the models that you're training. So I would say do your research, think about the problem very hard, build something, build a product, build a business. And if you are not building a technology product, then build something and then go to the investors. Most investors from an early stage entrepreneurs who have not run a company before need some kind of a proof before they would invest in you. If you need a very small 100 to 200K or 300K to build that out and you can't build without that, I would say go to create a pitch, do your research and go to a lot of these incubators and accelerators and these angel networks that invest these small amounts in founders. And in this earlier stage, they will just look at the team and the idea that you have brought. So they are all idea investor companies. But mind you that at this stage, they will want to take 10 to 15, 20% of the company. Talk to people who are experts in that domain, right? There are certain things that of how big the company can be, what is the target market, how you can achieve. So analysis and experience you can gain, or rather analysis and learning you can gain through a lot of research. But experience on the challenges on the ground, you can only gain through experience, and that you can talk to a lot of friends. But my belief is I have done this. It hasn't worked out because you have to understand that whenever somebody is telling you about experience, they are also sharing their biases with you. You have to cut through those biases. Otherwise, you'll never be able to invest. Because if you go to an edtech startup founder and ask him about another edtech, most probably or not, he will say, don't invest because there are certain challenges with it. As an investor, you have to be very forward looking to invest in any sector or domain. And again, be very comfortable with if the money doesn't return. As an angel investor, what I do is whatever money I invest, I basically put it out of my net worth. So it's as good as I've lost that money. I never count that money anywhere. I never look at that money again. It is invested. It is invested. I did some research. Somebody approached me. I like that person. I like that. I put that money and that's it. It's gone. I never, ever try to think about returns of that money. And, venture capital and angel investment is very different, right? So it's not about, I'm saying that, if you put money in a company that is public company, you should write it off. But if you are investing angel investment into a very, very early stage startup, immediately write it off of your books, right? That's how I look at it. That's how it makes easy. Otherwise, after putting in so much money, I would have gone crazy if I kept looking at that none of my angel investors in the last 10 years have made returns. And that's how it happens, right? For 10 years, I had no returns and suddenly one return, and it returned all of the money that I had ever invested and much more than that. So it's patience, right? It takes almost 10 years to build a company, sometimes much more than that, right? So very rarely in high cycles, I've seen, angels getting a return in 2 to 3 years, but don't bet on it ever. When you go to customers, then sit down and work with customers and just keep listening, right? Another thing is building a top good funnel and a complete sales cycle, understanding your sales cycle, buyer journey, and then creating funnels across the buyer journey. It's a lot of the exercises that you do offline while you're not talking to the customers that is more important than what you will do when you're talking to the customers, because most of the learnings, objection handling, questions, etc., you would have thought about, right? So sales is also an exercise. It's it's a full learning lesson and a full chart plan that you chart out, right? Sales isn't just showing up and starting to blabber about what you have done. It's about preparation more than anything, right? So if you have done your preparation right, and if you have learned from your past experiences of rejections and acceptance, I think you will be able to do a sales. But learning these process, I think I can recommend a few big books that you can basically look at and learn from people who have done sales in the past. Hiring is a different challenge altogether. I think there's a very, very different ways of hiring sales team and how to look at a particular sales team. And in fact, some of those books do a very good justice to about also hiring. The Thank You Economy, To Sell is Human, The Sales Acceleration Formula, The Challenger Sale, Build to Sell. Another one, David and Goliath,